Good morning, retail traders. I'm Washboardjim with a sneaky snake trading strategy where I love talking about chart patterns. It's a passion of mine, moving averages, and being in the now. And I'm going to talk about how to use moving averages when you're in a bear market and you need to try to find support. I've been saying very strongly and been playing a very defensive pattern. The market's been way overbought. I've been trading this market for 20 years. I know what overbought means, and I know what irrational exuberance means. And right now, I think a little bit of people are still in a little bit of denial, but I think we're under the understanding that we are overbought. Whoops. So this is the calendar that I go off of. We were at extreme greedy levels at one time where everybody just wanted to keep buying into the market and just nonstop, just up hundreds and thousands of percent on stocks that I've never seen in my 20 years of sitting here every single day. This is a very unusual election year, and it's way overbought. That's probably because we had such a huge pullback in the year of 2022 that not too many hedge fund managers made any money, and if they want to keep their job, they're going to keep this market up as best as they can. So right now, I think we're out of that extreme greed level, and we're in the understanding of denial and fear, which we're still probably in denial. Some people are still in denial. They still think we're going to go up. And just stocks that go up thousands, hundreds, and thousand, 2, 3, 4, 5, 6, 7, 800,000% in a single year and a half is just something that I've never seen in my lifetime. So it's unusual to me, and I've been playing very defensively, not swinging. And if I see a good opportunity, I'll swing it. We have pulled back on some stocks real well, and I think we need to pull back a lot more because the market is just playing off printed money liquidity that is going to stop. So I think we're down here in fear and denial still. People are still trying to say, well, we're pulling back. It just can't be. It can't be. But it can be. So I'm going to show you ways to find a support level. And I'm using the moving averages here. And we'll make this bigger. This is my way I look at things in the morning. I called resistance up here at the very top. I said I'm playing pullback, and we still can pull back quite a bit more to this here inverse head and shoulders where the 63 lies right now. Each one of these moving averages is a support level for me. Now I've been using moving averages, and I've moved them around and used different kinds, and so far these are my favorite ones that I'm using right now. And I can use all these moving averages in any time frame. We're not going to see 475 unless we get hit with a nuclear bomb. But for right now, I'm looking at this red line as a support line. That's the 63 EMA. If we do pull back to that area, that is called inverse head and shoulders. You have your left shoulder here, you have your head, and you have your right shoulder. Right now, we broke down below the neckline of that inverse head and shoulders. And that's right at 524. So if we break 524 and move up, we could have found support off the 21 EMA. The EMA is the white line. So each one of these represent a support line. And we've got the 9, which we broke down. That's no longer bullish. The 21, we could still be in the trade if we bounce back up and break the 524. And if we don't break the 524 and we start to breach down below it, we've got the 50 SMA. Now, many traders will trade off that 50 SMA on the daily time frame. That's an important support. That's a slow stochastic. The other EMAs are fast, and so we could find support at 516.72, somewhere in that area, a little bit above, a little bit below, but right at that 50 SMA. And then the next one we have would be the 63 EMA, and that would be a real good spot to probably start to load up. And look at your other stocks that you really like that deal with this SPY, and you could probably find you some good bargains right there. So that's it. that's what I wanted to show you, my moving averages and on how I'm using them when I'm coming to a pullback. And when we're bullish, when we're above the 9, we're still in play. If we can hold the 21 EMA, the 50 SMA is considered a strong buy to a lot of fat cats. And then I like the 63 because we might just dip down in below that because of people don't understand the map, the greed map. Extreme greed levels, I just kept saying it real loud, man. We're extremely greedy. This is uncommon for stocks to be up 4, 5, 600% in a year and a half. And then we've got anxiety where we start to pull back a little bit and we hear denial. Oh, we're not pulling back. We're not pulling back. And then all of a sudden it hits them. What damn, man. I'm starting to get worried and scared. By the time you get to despair, I just hold what you have. Maybe, people go into panic selling, and then this is where you want to really start to look at your stocks when you get to capitulation, and I think that'll be at the 63 EMA if we do hit that. Like I said, if. But we're getting into that position where fear is the best time for investing, greed at the highest level of financial risk, and that's where we were. When NVIDIA is up 1,100% in a year and a half, you've got to blink your eye and say, whoa, this is way too much. And the fat cats will keep trying to pump the market up. They'll just keep doing it because they're on a roll, and it's hard to start to fight the trend and the momentum. But if you're there and you beat them to it, you can make more money than they can because they're up there in that greedy level where, you can see it in their faces. But the numbers are coming out. I think we're going to pull back. We're pulling back to a consolidated area. And remember, this is an election year, and I've never, ever. Election years are great. The rumor used to be stocks are going to be good because the politicians are out of our faces and they're up on the campaign and on the road. But not in this case. Not this year. This is a very unusual election year, and just don't get caught in the trap when it comes time for the vote, because the market doesn't know who. Right now we're in a rigged economy, we're in a rigged government, and we just got to kind of go with the flow, go with the trend. This is the sneaky snake trading strategy where I love talking about chart patterns, moving averages, and being in the now. And have a great day. I love stocks, Vegas.